Sadile, good morning, sir.
So good morning, sir, Mr. Olamide. Thanks for having me. Good morning, and thanks for the introduction. Thanks for the introduction. So again, good morning. I welcome everybody on board again. Now today, because we have a lot of things to do, Mr. Olamide, I guess the recording is in place. So we have a lot of things to do. So we might not be able to wait for others, pending the time they are going to join. But the recording will surely be in place. I know Mr. Olamide has put that in place. So now let me just share my screen so we can go to what we have for today. So can someone use the chat box to confirm if you can easily hear me and you can also see my screen? Someone should usually use the chat box to confirm if you can hear me and you can also see my screen. Okay, thank you. So I can see that. So let's move to what we have for today. So now what we have for today is basically financial ratio. As Mr. Olamide has said, that I will be the one in charge of data analysis and financial ratio, while the other facilitators will take the one assigned to them. So now, before we go into financial ratios, I know as at last week, Mr. That is Dr. Olontoba Ayodele has been saying some things related to you don't need to be an accountant, you don't need to be a finance guy before you can know all these things you are teaching. Yes, they are accurate and they are absolutely right. You know, people think you have to study accounting, you have to study finance, you have to study economics before you can go into what is the world of finance majorly. But before I go into today's class, because as at last week we were having some people saying they were confused. We have some people saying they were confused that what Otumba was saying, what Mr. Emmanuel was saying was not in alignment. That is it possible? Is that not too ambiguous for them? So I've gathered some little resources for you people, to for you to know you don't need to have a background in economics or finance majorly before you venture into this field. So let me go into my LinkedIn account, then let me search for some names. These are top profile people. When I mean top profile, I mean top profile. So we can easily see them. Then let's check what they study before we move to what we have for us today. Today will be more of interactive. Trust me. Trust me. So let's check Mr. Abraham Duro Sonwo. Then let's see what did Mr. Abraham Duro Sonwo studied in school. Then also let's check another person. What did these people study in school? Then are they in finance? Yes or no? Are they doing well in finance? Yes or no? So we see. Yes, this is the person I'm talking about. You will see Mr. Abraham Drew Sawo did not even study finance in school. I guess he studied physics or chemistry. Then you will see he is doing perfectly well in the field of finance. He has moved from, I guess, let's see, I don't want to keep saying, you can see he was the managing director of ARM, which is Asset Resources Management. Now he's working as the vice president of NCR, which is Nigeria Sovereign Investment Authorities. Now let's go to his education. I have to be a little bit fast because I have a lot of things planned for us. So now let's see, what did he study? Okay, now here he has removed his bachelor's degree. As at when I checked last, it was there. So he didn't study anything related to finance. He studied physics. He studied physics as his ordinary, as his bachelor's degree, at his bachelor's degree level. Okay, while we are still waiting for Mr. Abraham, let's check the head of Cardinal Professional Service. That is the person of Emmanuel Onosomi. person of Emmanuel Onosomi. Let's check what Mr. Emmanuel Onosomi studied in school. Then is Mr. Emmanuel in finance or accounting? You see, he's also doing fine. He has worked at one of the big four companies, and you observe that presently he's doing fine in finance. You can see firms he has worked at. He has worked at Anderson. He has also worked at I'm trying to scroll down. Let's go to his education first. Education. Now, you can see he studied food engineering as it at his own bachelor's degree level. He studied food engineering, and he started at what? At senior advisor. He started at senior advisor as what? KPMG till getting to Anderson, then further at now at Cardinal Professional Service. So it means that whatever you study in school does not really matter. It's just your passion, and wherever you find yourself, just develop that zeal to always want to go and develop yourself more. So now let's go into what I have for us today. So I won't load us with too much information. We are going into introduction to financial ratio. I won't talk about the data analysis aspects. Then we also talk about how you can easily download firm's financial statement, how we could easily import this into into Microsoft Excel, which is the practical side. Then, if time permits us, we can easily go to horizontal and vertical ratio analysis. So now let's move to introduction to financial ratios. So now, introduction to financial ratios. What I plan for all here is that what is financial ratios? What is this thing used for? Who are the beneficiaries of financial ratios? Then again, you should ask yourself this question: why should I want to know about financial ratios? So those are the things I'm going to explain very briefly. The first definition I wrote here is that financial ratios are like a financial GPS. You all know GPS, right? That talks about your present location. Where are you presently? Where are you heading to presently? Helping you navigate a company financial performance and make informed decisions. It's as simple as that. So let me break down for you also in a layman's terms. Financial ratio is just like you looking into one company you want to invest to, or looking into company you want to borrow a loan. Check if this company will be able to give you return. When we are talking about investing, investment deals with return. Then when we talk about debt, you want to borrow them a loan, you have to check if this company is financially buoyant or financially stable enough to repay this loan, because you don't want to borrow a firm a loan and it end up being a bad debt on your own account. You have to be able to be sure if they could easily pay back your loan and the interest you are charging. So that's are the part of importance of financial ratios. Then again, you want to invest in an organization. I know we have a lot of investors in the house. You want to invest in an organization, you have to know if you are investing in XYZ firm, will your investment or will your stock appreciate or it will depreciate over time. You don't just buy Dangote cement share price because you see the share price is at 400 today, maybe tomorrow it went to 500, you now decided to buy. You don't know what is going on in the organization, so you might end up running an investment that it will lead to depreciation and you will lose your funds. So these are the importance of financial ratios. It gives you access to navigate the financial performance of an organization, to know, okay, will this organization continue to exist over time, or very soon the company will liquidate. When we talk about cash issues, you understand, you have to know what is the present performance, financial performance of this organization. Again, I know I'm in the midst of scholars, as I've said earlier, that this section will be more of interactive aspects. So let me ask the house again. I know we have financial experts also. What do we think financial ratios is also in your own layman terms, or what do you think? Why do you think we need to understand this financial issue? What do you think it is? How it is useful for a layman? I'm throwing the question to the house. The first question is, if you are there, why do we need to know about financial ratios? Or how can it easily help us? Before we go into the practical, I don't just want us to fly into the practical. Hello, are we together? Hello, are we together, house? Why do we need financial ratio? Okay, you can unmute your mic and talk.
Um, Good morning, sir. I
Good
feel
morning.
financial ratio helps us to get the strength or to know the strength of a company. Because why, for my own knowledge, if you should know these ratios and you know the percentage, you can able to determine or detect if a company is what performing well, or there's a place where the company needs to adjust. So financial ratio helps to get the durability, the strength, and also identify some weakness in the company. Thank you.
Okay, thank you, Mr. Emmanuel. It's as very brief as that. We've done justice to that. So, what financial ratio does is very simple like that. Here we talk about investment, we talk about debt. So, you have to understand the financial performance of an organization before you go into investing, before you go into borrowing. Even it is applicable to vendors. You want to sell commodities to an organization, a big organization, on credit. You have to be able to know if this firm will be able to repay your credit, the credit you are giving to them in the long run. Is the firm battling with liquidity issue? When we talk about liquidity issue, we are talking about cash. Do they have enough cash to continue running the day-to-day activities? We call it operating cash flow. Do they have enough cash to continue running the day-to-day activities of the organization? We use financial ratio to detect this. So as a vendor or as a supplier, maybe you are supplying an organization, or you know your parents or your guidance is supporting and is supplying an organization a certain commodity, and you know all these firms are wise enough to the extent that they will tell you they know how to negotiate with their vendors or suppliers. They will tell you, bring a commodity to us on credit, we pay you so time. So you have to know if the company is buoyant enough or has that financial capacity to repay you your credit, the credit you are giving to them, which could be your trade receivable on your own part. You understand? You are expecting cash from this firm. So without much ado, let's go into the type of financial resources we have and what does this financial resource does on companies financial statements. The first one we have is we have four. We have profitability ratio, we have liquidity ratio, we have efficiency ratio, and we have solvency ratio. You can easily jot this down. You can easily jot this down. And after this slide, we are going into practical. So we have profitability ratio, we have liquidity ratio, we have efficiency ratio, then we have solvency ratio. Now, the profitability ratio is talking about if the firm generating enough profit. You know, the main aim of a producer is what? Profit. To maximize his profit. That is the main aim of a producer. Nobody is producing to make loss. A producer is not producing to make loss. A producer is producing with one major sole aim, which is what? To make profit. So you have to ensure you are checking, is the firm generating enough profit. So looking at my simple definition here, profitability ratios measures a company ability to generate earnings and profit from its operation, helping investors and creditors, which is the person giving debt, that is the creditor, access its financial performance. Now, you want to know if a firm is generating profit from its day-to-day activities. So what we usually use majorly is profitability ratio. Then again, we have another one called liquidity ratio. What does this liquidity ratio does? This liquidity ratio evaluates a company's capacity to meet its short-term obligations and pay off its debts. Hope you are following. Providing insight into its financial flexibility and stability. When we talk about to meet its short-term obligation and pay off its debt, it means that okay, every organization, be it Lafarge, be it Brown Cement, be it Dangote Cement, even be it oil companies, mention them as many as we have, even investment firms have both combination of equity and debt to what? To function the firm's what we call financial needs. For every organization there's always a financial need. So to fund this is majorly always in two places, which is combination of equity equity and debt. So to calculate the debt ratio, and we have two type of debt. We have short term debt and we have long term debt. You understand? We are not going into that. So when we want to know if this firm can easily pay the short term debt, which Yoruba usually called which, let's not go into Yoruba because we have different people, we have different tribes. I don't want to be tribe bias. We call it short term debt, maybe for maybe a present year, or maybe to yes, a present year, which is the current liability. You understand? So for us to calculate that, we use liquidity ratio to calculate that short term obligation. Liquidity ratio to calculate it, to know if this firm is borrowing from us, if you are giving a loan to them, will they be able to pay back in the short term. Then again, we have efficiency ratio. What this efficiency ratio does is also as simple as assessing how efficiently a company utilize its assets. When we talk about assets, it's just majorly what the company puts in for what day-to-day running of the organization. How is this company efficient enough to manage that thing, that asset, and manage their inventory and collect its receivable? I've talked about receivable earlier when I was talking about a firm negotiating with maybe its customer. On the firm side, it is its customer, maybe giving them some commodities on credit, then wait till they repay. You understand? It is recorded on the receivable aspects. That's what we call receivable. Then also, as a lender, you have to be able, or an investor, to know if this firm are able to collect this kind of cash from their customers, or it end up being something that is not collectible again. How are they managing that aspect? Then highlighting areas for improvement in its operation. It's as simple as that. We will go into that so you can understand better. Then we have the last one, which is solvency ratio. The solvency ratio is just like the liquidity ratio. The difference between the two is just because one measures short-term obligation while the other measure long-term obligation, which is long-term financial health. If you are borrowing maybe for 10 years, you are borrowing for maybe 15 years, is the firm buoyant, financially buoyant enough, or financially stable to pay this debt and interest within the stipulated time? So that is what we usually use solvency ratios for. So you can easily jot down these formulas we have here, because that is what we are majorly using today, and that will be the end of the theoretical aspect. Now we are moving to the practical aspect, where we go to firm websites, download the firm financial statement. Then let's look at this firm. We've been hearing this firm on our social media, we've been hearing them on our television seeing them everywhere. We want to know if these firms are good in operating their day-to-day activities. There are common firms we know. I've packed, I've jot some firms down for us, which we are going to use. We are starting with Bow Cement for now. Now, I've picked out of profitability ratios, all the ratios we are seeing here, we have more than that. But just to make the class as simple as possible, we are just treating this particular aspect. And if you want to know more about these financial ratios, there's a paid version which Data Drive Insights usually talks about in depth about financial ratios. We have a lot of financial ratios, we have a lot of profitability ratios, we have a lot of liquidity ratios, even we have market ratios where we talk about, we also have gearing ratios. But to keep things as simple as possible, we'll be talking just three under profitability ratio, we'll be talking about just two under liquidity ratio, then we'll be talking about just one on just two under solvency ratio, then three under efficiency ratio. Under efficiency ratio, we still have conversion ratios. We have conversion ratios. We still have another one which we won't be going into. We'll just be talking about this. DSO means days of sales outstanding. We'll be talking about days of sales outstanding, which majorly talks about account receivable. If you give a commodity, if a firm sell a commodity to a customer on credit, how many days does it take them to repay this kind of cash? That is what we are going to use days of sales outstanding for. Then we have days of inventory outstanding. We have a lot of firms that will tell you, okay, we want to collect raw material. How many days does it take them to repay this supplier back after selling this? No, under days of inventory outstanding, it's talking about how many days does it take them to turn all their inventory into sold item. That is, how many days does it take them to sell their inventory? You understand? It's just like you preparing your commodity. Then how many days does it take you to sell them in the market? That is what we talk about, days of inventory outstanding. Then again, we have days of payable outstanding. Okay, are you able to negotiate very well? Are you able to negotiate very well with your vendors or suppliers by delaying their cash, because cash is king, so it can be used for other things pending that time. So it can be used for other things pending that time. Then we have the liquidity ratio, we have profitability ratio, then we have solvency ratio. So as I'm talking about these ratios, I'll be explaining them then with the appropriate interpretation needed for us to know. So let's go to the practical aspect. So now we'll be going to Bow Cement. So before I go into Bow Cement website, do we have anybody who have any question? Do we have anyone who have any question? Do we have any? So I will take that as no question. So now let's move to downloading Bow Cement. Let's move to downloading Bow Cement financial statement. So there are two ways of downloading Okay, so let me just give you time to write the formulas. So once you are done, kindly simplify, you are done writing the formulas. So you just have about a minute to write the formulas. I guess you are done. You should be done by now. at Oluwaseun Jinodu. Are you done by now? So I can easily continue. Okay, good. So now we'll be downloading the Boal Cement financial statement as a case study. So we'll be using two major sources. We have Firm Investor Relation and we have Nigerian Exchange Group. Now, before we go to the Nigerian Exchange Group, there are some certain rules we need to understand. One of the certain rules is that every organization listed on Nigerian Stock Exchange has been instructed that annually they must upload their financial statement on the Nigerian Stock Exchange market, on the Nigerian Stock Exchange Group website. So let's first start with NGS Group. So you can easily just search for NGS Group on Google. Let me just search NGS. Just type NGS Group. Okay. Then click on the website. You can see ngsgroup.com. So let's just wait while that loads. ngsgroup.com. So now this is the group. So for every firm listed, I repeat again, listed on the Nigerian Exchange Group site, the financial statement must be uploaded every year, both quarterly and annually. So what you need to do is come under trade, click under the trade option, then come to listed companies. So once you click on the listed companies, it's going to give you some options related to all markets, all sectors. Then it's going to show you company's name, the ticker symbol on the NGS website, then also the sector this company is located, then the date it was listed and the date it was incorporated. Now you can start seeing we have Abbey Mortgage Bank, we have Academic Press, we have Access Holding, and so on and so forth. Though there are sometimes it might be overwhelming you keeping to search because the one we are looking for is under B. You can see we have Boal Cement and it is located in the what? In the industrial good sector. It was, we can see the day it was what? It was registered. Date listed. It was listed when? It was listed January 9, 2020. We are not going into that. So there are sometimes you might be looking for a company located in maybe Z, Y or so. You can easily just search for the company names. Let's assume I'm looking for GT Co. So you can come here, type GT, then you should be able to see Guaranteed Trust Holding Company. Again, you can also search for other firms. We have Dangote Cement. Just search for the firm. The first thing you need to ensure is the company listed? Yes or no? If the company is not listed, you won't be able to see that here. But if it is listed, okay, Mr. Emmanuel, you have a question.
Yeah, not to bother you, sir. What do we mean by listed companies when we say listed companies? Because you've been saying listed companies. So I want to understand like what a listed company is.
Okay, so
Thank you.
what listed company means is that there are some companies that have not gone public in terms of maybe in terms of we have what we call IPOs, which is initial public offering, whereby they go in public and ask for the public to come and buy shares in their company. But if we have companies that are majorly funded by maybe in in-house fund, maybe by some certain set of people, not the general public, That is when it is not listed. But if it is listed on the NGS website, it means that they went to Nigerian Stock Exchange Group that okay, we want to issue out some certain shares in our organization for the public, general public, to what, to buy. That's where we mean list, meaning that they are listing out their company. For instance, we have companies that want to expand, they want to expand their capacity, and looking in-house, they might not have enough fund to fund that. So they might decide to go to NGS. That okay, NGS is a recognized group in Nigeria, owned by the Nigerian government. That okay, we want to list our company on the stock exchange group for people to come and buy certain part of our shares. Maybe they need about maybe $50 billion, maybe they need 15 million naira, you understand? So they could easily list it for the general public to buy these shares. And once the general public is buying, now there has to be accountable by giving out their financial statements quarterly and annually to the NGS for people to easily assess their financial performance. So that is what we mean by listed. So I guess I've been able to explain your question, sir.
Yes, thank you very much, sir.
So now we know all these companies are listed because people have bought one or two shares in the organization. So we have African Prudential PLC and so on and so forth. But here we are just dealing with Bow Cement. So if I click on Bow Cement, let's wait till it loads. It's going to give me the present share price of Bow Cement. You can see it's giving me the present share price of Bow Cement, which is what, 93 naira per shares. It's also giving me the total volume bought by the people. You can see we have the total volume, we have the total value. So it's giving me necessary infos I need to know about what Bow Cement in a glance. It might not be the full, because when we talk about investing, it's not limited to this. We have about the 52 weeks low, which is 88.2. We have the highest 52 weeks, which is what, 164. What does these two things mean? It means that 52 weeks backward, the share price has not gone below 88.2. The lowest low, or let me say the minimum Bow Cement has recognized in terms of share price is 88.2. Then the highest it has recognized when we talk about shares appreciating, the shares gaining value, it is what, 164.8 kobo share price. So you can also use this in determining your investment decision, but it's not limited to that though. Then going forward, it's giving me the trading name in the what, in the stock market. The trading name is Bow Cement blah blah blah. Then we have the ticker symbol, we have the sector, we have whatever you think you need. But I'm not interested in all this. We have the market cap. What I'm interested is majorly the financial statements. So once I come here, I can easily click on the financial statements. Now again, I want you to understand these two things. The financial statement usually comes in twofold. We have the quarterly financial statement, then we have the audited financial statement. What the audited financial statement means is that it's the combination of the 4 quarters, which is first quarter, second quarter, third quarter, and the fourth quarter, that lead to, or that consolidate to audited financial statements. So for 2023, this is the audited financial statement for 2023. You will agree with me that the new year of 2025, we are still in 2025. So now the 2024 audited financial statement is not available, is not ready. Sometimes it might take some months before it is ready. You can see this one was ready February 29. You can see date it was uploaded. So let's expect that the 2024 audited 2024 financial statement should be ready maybe around February or April. So I guess their auditor is in charge of that right now, trying to put one or two together and ensure that giving us the accurate financial statement, not the compromised one. So majorly it depends on the analysis you want to do. If you want to do a quarterly analysis, you are meant to download financial statements for the quarters you are interested in. But I am interested in the annual. So I will be downloading audited financial statement for 2023. So let me just right click, then click on open a new link. So let's wait a little bit. I guess everyone is following the process. Let's hit the chat box if we are following the process before I continue, so I can know if I'm simple as possible. Just type if you understand the process. If you understand the process, just type in the chat box, I understand. Okay, thank you. So now this is the Borough Cement annual report. I can easily just download this. Once I click the download button, I download it on my PC. So what do we need? It has been made simple to the extent that we have corporate information, we have report of the directors, we have governance, we have corporate governance reports, we have report of the audit team or the audit committee, we have statement of director's responsibility. I don't need all this. As an investor, as an auditor, sometimes I might want to go into reading the audit committee reports, reading the director's reports to know how is going on in the firm. But there are sometimes this job might be assigned to other set of people. What I need majorly might just be what I'm coming here to do, which is what? The statement of what? Profit and loss, and the statement of financial position. Sometimes I might need the statement of changes in equity. I guess Mr. Emmanuel explained that last week. Also, we have statement of cash flow. For today, I don't think we need that. We only need just these two, which is statement of profit or loss and other comprehensive income. Then also statement of financial position. So it means we are dealing with page 31 and 32. So let me just jot that down in my notes. We are dealing with page 31 and 32. So let me just fly down to 31. Now this is page 31, which is the annual report and financial statement for the year ended 31 December 2023. So now let's see. This is the revenue made by Borough Cement. Then again, I would like to ask a question. So I know maybe I'm in the midst of scholars, or I'm in the midst of again, I won't say the other hand, but I just believe I'm in the midst of scholars. When we talk about N apostrophes 3 zeros, what does it mean in accounting terms? Before we start reading this financial statements, what does this mean in accounting terms? Can someone just help us out? Can someone help us out? What does that mean in accounting terms? What does N apostrophe 3 zeros? What does it mean in accounting terms? Do we have anyone in the house who wants to help us out with that? N comma 3 N apostrophe 3 zeros. Is someone helping us out? I don't want to believe you don't have anyone who does not understand that. Should I call names? Thank you, Mr. Gabriel. You are absolutely correct. So it means it has been adjusted for millions. Is it millions? I'm coming. Let's ask anybody in the house to attest to that. When we have n apostrophe three zeros, does that mean it has been adjusted for millions? We need to know. Can someone attest to that in the house? Can someone easily confirm that in the house? We have scholars. We have scholars. Let me try to call a name. Mr. Samuel, because I believe you are a treasury analyst. Mr. Samuel, can you attest to that? When we have n apostrophe three zeros, what does it mean, Mr. Samuel? Is Mr. Samuel on this call? Mr. Olaleye Samuel, are you on this call, sir? I don't think he's on the call. Maybe he's presently doing something else. So let's continue. You're absolutely correct, Mr. Owolabi. So it means it has been adjusted for millions. So whatever values we are dealing with, we have to ensure that we take account for that n apostrophe three zeros.
Yeah, hello.
Okay, I can hear
I
you.
made I was a mistake in the meeting. That means if you have n apostrophe three zeros, you're talking in millions.
Thank you, Mr. Samuel. Thank you. So it means I just want to let you people know we have scholars in the house. So it means we've adjusted for millions. So whatever values we are dealing with here, we have to ensure that we are taking account for this n apostrophe 00, these three zeros, because it's stating that we don't want to be dealing with large figures. That is why we have to do it down in that manner. Then again, we have note to account. We won't be going into that because this note is telling us the breakdown of how they generate this revenue.
Mr. Olakile, please, your mic is muted. You've not been hearing me.
Sorry, can you hear me now? Can you hear me now?
Yes, you can go ahead.
Okay, thank you.
Yes, sir.
So, thank you, Mr. Olale, once again. So it means whenever we are dealing with this again, you have to ensure that if you are talking about any values right here, you have to ensure that you are taking care or taking account for these three zeros we have here. Are we together? Then again, the next thing we have here is note to account. You observe we have 5, we have 6, we have 7, we have 7A, 7B, 8. It's telling us that there are some further information we need to know about these line items. There are further information we need to know about these line items, which is either revenue from contract with customer, cost of sales. Let's go to revenue from customers, revenue from contracts with customers, which is note 5. We are still coming back to page 31. So let's try and locate note 5. Note 5. Now this is the note to account. You can see it's note to financial statements. So now we are going to note 5. Let's see what is in that note 5. Now you can see in the note 5, this 5 is talking about revenue from contracts with customers. Now it's talking about the companies derive revenue from the transfer of goods at a point in time in the following major product categories. You can see it's giving us a breakdown of how they are generating what? The revenue. It's telling us sales of bagged cement was so. Sales of bulk cement is so. Now we are having idea about how bulk cement is what? Generating their revenue. Also, if you want to go into this aggregation of revenue from contract with customer, you have the values here. You see, primary geographical market, we have Nigeria market and we have outside Nigeria. We're talking about, okay, there are some certain commodity sold in the what? In Nigeria market. There are also others sold in what? Outside Nigeria. If you are doing an analysis related to Nigerian market, you can easily use that value. You can see now we are having better understanding about how well cement in quotes, take note, you are not dealing with other sectors, you are not dealing with other firms, because every firms has their own what, they have their own unique way of generating revenue. Some might be in terms of commission, some might be in terms of interest, but this is restricted to, maybe let me use the word, cement industry, you understand. So now let's go back to our page 31. So one thing you need to, the two key things you need to note here is, the first thing is that whenever you are doing any analysis, you have to take note of this n apostrophe 3 zeros, then also check if it is necessary the note to account for further breakdown in what, in line items explanation. So now we need to bring all this to Excel. That is our next question. There are two ways to bring this. The first way is the manual method, and the second aspect is what, is the automated aspect using Power Query. So let's try the manual method. We won't be going into the Power Query method, because the Power Query method is meant for the paid version of the DDI section. So I've been want to stick strictly with the manual method, but I'm meant to introduce us that there are other ways to make life easy. You know, there are different things in the world right now that makes life easy for us. One of it is AI. Once you are given an assignment, you don't need to brainstorm, you don't need to give yourself ready. You can easily use AI. It depends on the AI you are using, maybe ChatGPT or blah blah blah, or Meta AI, and so on and so forth, to make life easy. So Power Query is also meant to make life easy for collection of data on PDF, on investor relation, on website, and so on and so forth. But we'll be using the manual method here. So if you want to use the manual method, the first thing you need to do is highlight, hold your Alt key, then highlight where you want to copy. You can see I'm coming. I need to download this first. Let me download, then go to page 31. So let me just go to the folder. Let me open it with my PDF app. Now we have it here. I need to stop. Still loading. So let's wait till it load. Let me just wait till the program responds. I guess it will be better if I can easily just close. So let me close the program.
Sorry, sir, Mr. Olaleko. So how many minutes do you have left for us?
I have about an hour left. I have an hour left. Okay, so now let me open this back again. Then we can continue. So we are going to page 31. Let's not forget that, because that is where the information we need is. So today we will be going into Excel. So now what I need is majorly this. So let me just go down to page 31. Still loading. So while that is still loading, let me just go for, is there any question Is there any question? Okay, I guess we can continue now. So now this is what we need to copy. So the first thing you need to do is hold your control key, then copy, drag the aspects you need, then press Ctrl C to copy, then come down to Excel. Now there are two ways of pasting. You might decide to just paste by pressing Ctrl V, and you might decide to use Alt ES. It's going to give you option to paste maybe as HTML, or maybe to paste as Unicode text, or to paste as a text. Sometimes you might not remember, or you might have forgotten the shortcut, which is Alt ES. You might need to come to under paste, then click on paste special. It's going to give you the same option. So click on text, then click OK. So now we have the revenue from contract with customer. We have cost of sales, we have gross profit, we have administrative expenses and other line items. So what I need to do again, I need to create extra space. Again, I might be using some what is it called, some shortcuts, because I'm used to shortcuts. It makes life easier. But if you want to understand more, I guess DDI has a fundamental course also that explain about fundamentals about Excel, the basic things you need to understand about Excel from the start to finish, the shortcuts, the work environment. You might not be able to say that right now. I might not be able to explain everything, but there are some other parts, or maybe the paid version of DDI class that explain about that. So right now I want to create an extra row. Before I go into that, I guess we need to understand one thing again. There's difference between row and column. This B now is a column. This B down, the cells in B that I'm highlighting right now, is called B column. Then again, this 2 that I'm highlighting right now is known as row. So whenever I am talking about column, just know it, I'm talking about alphabet. Maybe alphabet B, alphabet C, or alphabet D. But whenever I'm talking about rows, just let it sink as he is talking about the numbers or the values, maybe 1, 2, 3, 4, blah blah blah. So I want to add new rows, meaning I want to add another row on top of revenue. So what I need to do is hold my shift, press the space bar, then hold Ctrl Shift plus to add an extra row. You can see it has added. Then I can keep pressing my plus symbol on my keyboard. As much as rows I want to create, we keep creating. Also,
Sorry, sir.
I can
Sorry,
hear
sir.
you. I can hear
Can
you.
you can you please come back with that shortcut
Explanation.
on adding no, not the explanation, like just that shortcut on adding that row and column, please.
Okay.
Thank you.
So let me use my notepad to explain that. Let me just use my notepad. Let me try to locate my notepad. Now, for you to add a new row or column, if you want to add a new row, the first thing you need to do is highlight the row. So for you to highlight the row, you need to use your shift plus space to highlight that row. If you are dealing with row, let me state that here. So if you are dealing with row, the first thing you need to do is press shift, then press space bar. It's going to highlight that row for you. Assuming I want to add a row before gross profit, I can easily come to gross profit cell, then press shift space. If I'm adding, take note, before gross profit, then the next thing I will need to press is Ctrl Shift plus. Let me type that for you to see, sir. After the shift plus space bar, then the next thing I need to press is what? Control plus shift, then then I add the plus key. There's a plus key on your keyboard. But if you are talking about colon, maybe you want to add a new colon, adding. If you want to add a new colon, what you need to do is, instead of pressing shift space, you press your control space. You can see when I press control space, is highlighting a colon, not a row. Is highlighting the entire C colon. So if I want to add, let's say I want to add before B. So once I press control space, I need to press control shift plus again to add. You can see it has done that for me. So Mr. Olamide, are we good with that? You have control.
Yes, sir.
Okay, control plus space. Then we have control shift plus. Let me just copy that down. Then the same thing goes for deleting. If you want to delete also, you just need to press your control minus. There is a minus, or let me call it hyphen. There is an hyphen on the keyboard also you can use. Just press your control hyphen. After highlighting, you have to ensure you highlight first before doing that. So let me just continue. We are not going into that right now, but I need it. That's why I need to explain it. So let me delete this. Then for those that might not really catch up as fast as that, you can easily just come. If you want to use a manual method, there's always a manual method. Come to the home tab, then come down to where we have delete. You can see delete here. You can easily delete cell, you can delete sheet, you can delete column, you can also insert again. Insert is just like adding. You can insert row or insert column, but I'm used to the fast method because I need to deal with a lot of data at work. So you need to look for the fast method instead of moving my mouse all around. So again, let's go into what we need. The next thing we need is to ensure that these cells encompass what we need in that column. So what we need to do is just come to this line in this region, double tap it, then it's going to expand. Sometimes I might not want to come to the top region because if I'm dealing with a large data set that I might not be able to see sometimes, or scroll to the top right side of it, what I need to do is just use my Alt H O. You can see we have auto fit column, so I just need to press Alt H O I. Again, let me use that, Alt H O I. It automatically fits in. It's automatically fits in, Alt H O I. So I don't need to keep going or moving my mouse all around. So after that, again, we need to come back to our financial statement. What do we need to do here again? So we need to scroll down. We need the values. The next thing we need is the values. So we come down again, hold your Alt key, highlight everything, Ctrl C to copy, then come down here, let's leave a space, then Alt ES to paste special as text. So once I've done that, I'll double tap this. Is someone mic unmuted? Do we have anybody who has a question? Okay, Mr. Olamide, can you mute your mic if you don't have a question, sir? Mr. Olamide, okay, thank you. So the next thing we need to do after that is, we've copied that, we need to cross check is if those figures are at the right region. Yes, those figures are at the right region. So the next thing we need to do, let's copy the next value. So we have this again. We use the same method, Ctrl C, then let's paste. Alt ES. We are pasting as text also. Then let's expand. Alt HOI. So once we've done that, we need to specify the years, so we know which year we are analyzing. This is 2023, this is 2022. So let's come here, let's make sure we have 2023 right here. I'm typing it manually, so we have 2022 right here. So now we have 2023, we have 2022. Again, let me make some few changes, because I'm not an accountant. It is an accountant that use that format, that is to that format, which is prior year comes after the present year. But for the finance person, which I am, we usually take it the way it's meant to be, which is prior year comes before the present year. So after that, let's check again. Another thing we surely need, let's go back to our financial statement, our PDF. We need to come back to our PDF. In the formulas we've written down, what are the things we need to calculate, we need to know? You can see we have sales, we have gross profit, we have sales, we have operating profit. Now again, it means we need to bring our financial position or our balance sheet, statement of financial position or our balance sheet on Excel for us to make these calculations. So let's go back again. Let's give this an header and call this income statement. Let's call this income statement. Let me highlight it, then give the heading a color. Let me just use the background color. I just want to make it stand out. Okay. Then also, I don't think I'll be needing the grid lines. That is my personal preference. It has nothing to do with the analysis. Let's take note of that. It's just my own personal preference. So I don't need the grid line. I can come under view, then remove the grid lines, so it look more neater now. So the next thing we need is the balance sheet. We need the balance sheet. Again, let me just copy this format. Then I can Alt ES. I can just paste it as format. In case you don't see that, you can easily just make use of the manual method. Come under home, come under paint, or come under paste special, click on paste special, then click format. We are pasting as format. Then now let's go and copy the line items and the values. The line items and the values. So let's go under financial position. Yes, this is the statement of financial position. So let's just highlight this. Copy. Don't be overwhelmed with the line items if you don't understand some things there. Don't worry. Whatever I'm going to be using, whatever line items I'm going to be using, I'm going to ensure I'm explaining the one I am using, what it stands for in the organization day-to-day activities, what it means. So again, don't forget we have 2022 first. Again, let's highlight the values. Let's highlight the values, copy. So we are starting with property, plant and equipment, but ES. We are pasting it as text. Take note, you will observe I'm not starting with non-current and assets. The reason why is that all these are just headings. Even we still need to check our values if they are sitting at the appropriate region. There are some places that are just headings. For instance, now under non-current liability, you don't need to have a value. It's just an heading. It's just a heading. The same thing goes to liability. You don't need to have any values. It's just headings. The first line item is bank and borrowing under liability. You understand? So we are still going to make the adjustments later. But let's copy the next one right here, which is 2023. So we do the adjustments together. So we copy, Ctrl C, then come right here, then we are pasting Alt ES, text. So now since we've copied and pasted, now let's start doing the necessary adjustments. Under current assets, it's an heading. We don't need any value there. So we need to highlight everything, then start adjusting. So once I highlight again, that is another question. Some might not be used to Excel. Some might not be used to Excel. So what you need to do is press your shift, highlight using your navigation arrow. So once you highlight using your navigation arrow to the right, then also you press your down navigation arrow to highlight downward. But if you want to highlight everything downward, just hold shift, control, then press your down navigation arrow. You can see it highlights everything. So once you've done that, I'm coming, let's do that again. Right, shift, let's go to the top. So let's just try to drag this down to inventory. So inventory should have a value. Good. Now we have inventory to have a value. So let's come down to this non-current assets and assets. Let's bold it since that is a heading. Same thing goes to this current assets. We need to ensure we bold that also. Control B is also an heading, or we can easily just create a space to let that stand out. Same thing goes to total assets. Okay, let's just go to space here. Then this is a summation, so let's bold it. The summation of all the assets. So again, we can easily always cross check the values if they are in alignment with what we have here. So under intangible assets, we are meant to have 12. You can see 12 from 12 8 2 1 6 6 4. So we have to cross check that if that is absolutely right. Yes, I guess that is absolutely right. Okay, then we have a total for non-current assets to be 816. Total for non-current assets. So we need to adjust this back up. So let's just adjust all this back up. Let's adjust. We need to highlight. The first thing is highlight. Once you highlight, then come and drag, or you can easily cut and paste. So again, ensure this is bold, or you can just create a borderline, which is come under border, then we'll be creating a top border to signify that is what you can see, a top border to signify that is a total. Then let's bring this down. So I'll be using cut, Control X, then come down and paste. So again, let's check the inventory for bar cement. Is the value absolutely correct? 52 and 85. Yes. Cash and cash equivalent is absolutely correct also. Yes. Trade receivables is absolutely correct. We have good. Prepayment, that should also be absolutely correct. Due for repayment, yes. So let's onboard this. Then the total assets is now what we have here. We have total, don't forget, we have total current assets. We have total current assets, then we have total assets. So it means we still need to create another space right here. Are we all following? Are we together? I need to know if we are together. Are we still together? Hello?
Yes, sir. Yes, sir.
Thank you. Thank you.
Yes, we are.
Yes, sir. Okay.
So we need to check if the values are corresponding. So again, this is our total current assets. So we have to always make adjustment for that. Total current asset. Then after that, the summation of total current assets and the summation of non-current. Again, let me bring this down. We have total non-current assets. The summation of the two is going to give us the value we have here. So let me just do this again using my own fast method. So we have Alt HBP to create a top border. Then let's confirm is the values are right. So I said summation of total non-current assets and total current assets will give us our total assets. So let's confirm if the values are absolutely correct. So let's sum our total current assets for this year, non-current assets for that year, and the current assets. You can see we have the same value. So that is absolutely correct. So let's go further to under liability. It shows we've done proper adjustment to our current side. So let's come to liability region. So under the liability region, our current liability is also the heading for the current liability region. So again, let's create a space here. Then let's check what do we have. Is it syncing with our balance with our financial statement on the PDF? Okay, we have bank borrowing to be 295. Is that right here? Yes. Let's check our government grant. So the government grant for 2023 is 23. Government grant 23. Something is wrong. It's not the same value. So now let's keep on checking. Debt security 2023 is 114. Debt security is 114. Employee benefit is 4. Again, that is absolutely correct. Then we have deferred tax liability. That is also correct. Government grants, okay, 1 and 2. Yes, that is correct. Then we have provision for decommissioning liability to be 23 and 10. That is also correct. So after that, we have our total non-current liability. So let's just cut this. That is our total non-current liability. total non-current liability. So let me first add a space. So it stand out. Total non-current liability. This has to be plural. We have more than one line items. So let me just adjust that. Good. Then we bold, then add a borderline. So we need to ensure we bold. Then let's add a borderline. Then to the next aspect, which is current liability. We are almost done. Before we go to the interpretation, we are almost done. We just need to verify. We really need to verify. So the first thing we need to have first is our total current liabilities. Then this, let's fact check that again. We start with lease liabilities of 73. Yes. Then provision for decommissioning liability for current liability is also 2 and 1. Let's confirm that. Yes. Then we have 377 as total current liability. 377. So this has to be for total current liability. So let's ensure that is also bold. Then we have a borderline, top borderline. Then this should be our total liability. Then again, it's also a simple logic. You can always confirm this if you are right or wrong. So your summation of total non-current liability with total current liability will give you your total liability. Let's also confirm that equals this plus this will give us the value we have below. You can see that is corresponding. So again, we have equity attributed to shareholders. Now I've been talking about equity, just talking about those that are investing in the company, those shareholders that are investing in the company. So this is our side. I've been talking about equity so far. So I guess this is now correct. Let's just make little adjustments here so we know the totals from other line items. So here we have what HBP, then let me have a double borderline here, which is we have double, which should be U. Good. So now we are done with the little arrangement. The next thing is to go into financial analysis or financial ratio analysis. Let's not forget this is 2022. Let's always put the year why this is 2023. Again, you might be asking the question, how is this switching from cells? If you want to switch from cells, you can easily use tab or you can use your navigation arrows. So now we are done with that. So the next thing we need to do is create a sheet for financial analysis. Let's call this, you can easily double click and name this FA. We are calling it financial analysis. Also, let's rename this as historical. These are historical data. So let's just use HIST, which is HIST, to stand for what? Historical data of a firm for 2023 and 2022. Now we want to generate our financial analysis. Again, I don't need the grade line. To me, it does not make my job look neat and cool for everybody to relate with. So let me just remove that again. So So again, let's have some headers like profitability ratio. Again, let's have another header like efficiency. I guess we have liquidity first. Liquidity ratio. Also we have efficiency ratio. Then we have the last one to be solvency ratio. So now let me edit this. Sorry, I had a little network glitch from my end. So I believe everyone can see my screen right now. Please, let's just confirm that so I can continue. We
Yes,
have
we can
less
see
than
your
30 minutes to go. You can see my. Thank you. So I had a little network glitch from my end right here. So let's just continue. We have profitability ratio. Now the two financial statements we need are ready now. We have the income statement, then we have the balance sheet. Then again, you observe as I'm strolling down, you're having issues with seeing the income statement. Sometimes you might not want that kind of scenario. So what you need to do is very simple. Just come to a good spot where you know you want to freeze. Right now, the cell I want to freeze is I want to keep seeing my income statement and the year I'm dealing with. So I can easily just come to cell C5, then come under view. Then under view you should be able to see freeze panes. So once you come under freeze pane, click on freeze pane. Then whenever I scroll down, I will always see my income statement, then the year I'm dealing with. So it is also useful for me when I get to maybe balance sheet, you understand. Then also if I'm even scrolling to the right, whatever place I'm switching to, I keep on seeing my line items. So let me just write it here descriptions, or let's say line items. So I know my line items, then I always see my years, because it will surely be useful when we get to balance sheet. So now the first thing we need right here, let's go back to our PDF. We need to calculate our gross margin ratio. So how do we calculate our gross margin ratio? We need gross margin ratio. Let me just copy it and come here. We need gross, let me type it here, gross margin ratio. We need to calculate that for our profitability ratio. We need our operating ratio, which is operating profit margin. Then we need our net profit margin. So let's just copy this, then come to our FA. there might not be enough space, so we need to create space. So let's start with control plus plus plus, then alt es to paste special as text, so we have enough space. Then again, it means we need to do some little formatting here. So let's come back here, let's copy this, okay. So let's just copy the format here, Ctrl C. So under here we are pasting as format, alt es, then paste as format. Good. You can also copy, then press F4. If you copy, paste, it's going to paste the same format. Then you can keep pressing F4 to repeat the same process if you care to do so. So let's call this 2023, then this is 20, sorry, this should be 2022, why this should be 2023. Let me put a space. Good. So now let's calculate it. For gross margin profit, gross margin ratio, we need to know it's what? Sales divided by gross profit. Now we have the sales value and we have the gross profit. So let's come here and calculate it. So it's going to be equals our sales for that year divided, which is / gross profit. Now, some people will ask me, how am I able to do that? It's very simple. Press your equal sign. If you want to go to the next sheet or the sheet after, you need to hold your control, then press your control, then click on page up for previous page. If you are going to page ahead, it's going to be control page down. It's as simple as that. So we need our revenue, which is the same thing as our sales, divided by our what? Gross profit. Okay, that will give us our gross profit margin or our gross margin ratio. So instead of doing the same thing again, I just need to highlight the cell forward to 2023, then press Ctrl R to repeat the same calculation for cell F or for 2023. So if I click on this to check the calculation, you see it's telling me that it is what? Historical sheet, it is calculating what? E5 and E7. Let's go and check E5 and E7. What is that? That is combination of what? 2023 revenue from contract with customers and what? Gross profit for 2023. I guess we understand that. So now let's come back here. Let me ask scholars in the house, what does this mean? Looking at the values we are seeing right here, we have gross margin of 2 points. Let's make this 2 decimal places. So let's come back to home, then this is decimal region. You can decide to reduce or increase. So I want to reduce. So this is 2 decimal places. What does this value say? Is there anyone in the house who wants to help us with that? What does this gross margin ratios says about Boa Cement? Is 2.22 good? Is it bad? Are we together? Gross margin percentage of 2.22. Is it good? Is it bad for Boa Cement? Are we together? Okay, so Mr. Emmanuel, you can unmute your mic and talk. So is gross margin ratio of 2.22 good for Boa Cement or is it bad? Checking, we have 2.22 in 2022. Before you explain, sir, check the 2 years. Tell us, is it improving or is it declining? Are they doing fine or are they doing worse? So Mr.
Okay.
Emmanuel, you have the
Thank you very
floor.
much, sir. It's actually increasing because for 2022 it was 2.22 and for 2023 it is 2.50, meaning that there was an increase in the profit margin. And also gross profit margin from my own understanding. So, 222%. That means the company has a 426%, which is even more than 100. They are doing very fine. It's just that their cost of production is low as compared to the revenue. Thank you very much, sir.
God bless you, Mr. Emmanuel. God bless you. Do we also have anyone also who wants to attest to what Mr. Emmanuel just said? Because we are getting to the interesting part of the aspects. We are getting to the interesting part of the class. Do we have anyone who also want to attest to what Mr. Emmanuel just said? We have peoples in the house also. I guess we have scholars. Should I need to mention? Do I need to mention name? Let me just check those we have in the house. Let me mention another person name to attest to what Mr. Emmanuel just said. So Mr. Gabriel Owolabi, are you with us? If you are with us, can you attest to what Mr. Emmanuel just said? Mr. Gabriel Owolabi, are you in the class? If you are in the class, just attest to what Mr. Emmanuel just said. Kindly unmute your mic and talk. I don't think he's right here. Maybe he's doing something. So going to what Mr. Emmanuel just said right now is absolutely good. We are talking about how efficient is this firm generating revenue. Consider what the direct cost related to what producing that their commodity. And you know, Brown Cement is into producing what? Into producing majorly cement. Let's go back to historical. Let's go back to the historical data. Let's ensure all these figures we are seeing them vividly. Now you see that for 2022 they generated a revenue worth 360, 989 and 105, and the cost they incur, the direct cost in producing or in generating that revenue is what? 198, 379, 891, minus what we have there, minus the revenue. Minusing that from the revenue, we can see what they generated. And in 2023 it increased, while the cost of sales did not even increase as how huge the revenue was increasing, which shows that okay, looking at the gross margin ratio, the firm can generate, is generating higher revenue from its what? Its direct cost. Is generating higher revenue from its what? Its cost of production, which means the firm is doing perfectly well. And looking from 2022 to 2023, it is increasing. And again, considering the fact that it is above 100%, as Mr. Emmanuel just said, it shows that okay, in terms of gross margin ratio, the firm is doing fine. But we can't decide that. That is why we have vertical ratio, we have horizontal ratio. We can easily compare the fact the brown cement gross margin ratio in terms of I guess that should be horizontal. Let me check my slide. You might not be able to get to that today. When we talk about vertical and horizontal, you see, so horizontal ratio is talking about comparing brown cement which is with its competitors. You know, brown cement has other competitors like Lafarge cement, like Dangote cement, who happens to hold the largest shares in the market. So we can easily compare brown cement, the gross margin ratio, for us to be sure that okay, brown cement is doing very fine in the market. We can compare his gross margin ratio with brown cement, with Dangote cement and Lafarge cement, to be sure. Then again, let's move to operating profit margin, because our time is fast spent. So I guess today, after I'm done with gross margin ratio and liquidity ratio, because of our time, I might not be able to do efficiency ratio. So I will leave that to us to try it out. Then during the week, I'm going to send us a recording for efficiency ratio and solvency ratio after we submitted our assessment, showing how to perform efficiency ratio and solvency ratio. So let's just see if our time will still permit us to do liquidity ratio today. So now, under operating profit ratio, we need to come here again. We can see we have operating profit here. Let me highlight it for us so you can see. Let me bold it. Control B, Alt H, B, P. Again, let's come to gross profit. These are totals, subtotals. So we need to highlight them so you can easily see them. Again, profit before tax is also a subtotal. We need to do the same thing. Profit before tax is also a subtotal, so we need to do the same thing. Then also we have profit after tax. We need to do the same thing. Control B, Alt H, B, P. So now we are going to operating profit. So let's calculate our operating profit. Again, let's check the formula. Let's not assume to know if we are doing the right thing. Again, what is our formula? For operating profit margin, it is what? Sales, which is revenue generated by Bow Cement, divided by the operating cost. Again, let's come back here. So again, we want to divide our revenue. Let's come down to revenue divided by the operating profit. That is what that says. Again, you can just move it to the right, copy, then Alt ES. We want to ensure it is 2 decimal place, so we are pasting it as format. Good. So now we have again, let's ensure this is speaking the right thing. Okay, so now what do we observe? Before we go into what we observe, let's calculate our net profit margin, because this is really getting interesting. We have net income, which is still the same thing as profit after tax. That's our net income. That should be sales, which is our revenue. Our revenue divided by the net income, which is profit after tax. Good. Again, let's increase this. So let's see. Let's copy. Alt ES. Let's paste it as format. So now I'm going to call someone again to help us out with this. Now let's see. We've seen the gross margin ratio for 2022. We've seen the operating profit margin for 2022. We've seen the net profit margin for 2022. We've seen the 2023 values also. So I want to call on someone. Looking at these 3 profitability ratios, what can the person tell us? I want to borrow Bow Cement money. Will the person advise me to borrow, or tell me just to flee or don't borrow? So who is helping us out with this metrics we have here? Is it advisable for us to loan or give money to Bow Cement? Who is helping us out? Do you have anyone in the house who wants to help us out? Do we have Miss Favor in the house? Do you have Miss Favor in the house? Okay, let me call Mr. Olale Samo as the treasury analyst. He should be able to help us out with that. Mr. Olale Samo, are you in the house, or is there anybody in the house who wants to help us out with that explanation? We want to give loan to Bar Cement. What will you say based on what we
Sorry, sir,
have
can
on
you please
ground?
go back to your screen so we can see the amount?
Thank you. Thank you. So now we have the values, Mr. Emmanuel. So what will you have us do? Should we borrow or we
We want
should
to
not?
borrow a loan from Boasimens. We want to borrow a loan from Boasimens. Why?
We want to give a loan. We want to give.
Okay,
We
from
want to give a
the
loan to
analysis
Bar
stated
Cement.
here, I suggest that we should give the loan to Boasimens because it shows that their company is. That's what I'm saying. It
Why?
shows that
Why?
the company is highly profitable from the percentage it's done on. Because, like I said, most people might not understand the effect of decimal. But when they convert it
Mm.
to percentage, because some people can be saying 2.78 as a very small amount, but actually all these ratios are in percentage. So what you multiply them by 100, you will see that 2.78 operating profit margin is actually 278%. 6.0, this company is having, yet it's highly profitable. The profit margin is high, both the gross profit and net profit. And according to what you told us in profitability ratio, if the profitability ratio is high, it means that the company is highly profitable. And I'll be able to, receive my money back and also an interest. Thank you.
Hmm. So as you mentioned that we should convert it to percentage. Now we see the percentage. You can see now looking at it, we have 222 in 2022. It increased to what, 250. Is able to generate a gross margin, a gross profit of what, 250 from his revenue when we deduct his direct cost. That is really really good. Going further to 2023 operating profit and net profit margin, it skyrocketed to 615. Wow, this is awesome. Which shows that if you are giving any loan to Brown Cement, they should be able to repay your loan because they are generating enough profit. They are generating enough profit from their what? From their operation. Now we can see after deducting all the necessary costs with interest, with respect to tax, with respect to interest, we still have 662.3. Wow, this is huge. Which shows that even in the short term, looking at this profit, we've not gone into liquidity ratio. I know the liquidity ratio will surely even give us something good, but looking at the profit right now, we can say okay, to giving a loan to Bar Cement is ideal, is good, because it shows from its profitability the company can generate enough profit from its what, from its related costs, maybe cost of administrative expense, maybe cost related to direct cost, maybe cost relating to selling generals and administration. Even after deducting tax, we can see the firm is doing perfectly well. So let's go to liquidity ratio. Let's add more let's add more rows. We need to add more rows. Then I guess liquidity ratio will be the last thing we'll be doing for today. Then we have current ratio and quick ratio. We have current ratio and quick ratio. We have current ratio and quick ratio. So let's go back. Let's paste. Alt ES. We are pasting as text. Then how do we calculate our current ratio? It's as simple as current asset divided by current liability. That is for current ratio. For quick ratio, it is current assets minus inventory divided by current liability. Let's go and practicalize that. Current assets divided by current liability. So again, we come back to our financial statement. We are going to, let's not forget, to the balance sheet aspect. So these are current assets for the year divided by, again, the current liability. Again, we come down to our current liability total. Again, we come down to the quick ratio, which is current assets minus, let's not forget, that is minus the inventory. You can see the inventory here divided by the current liability. Again, let's not forget, you have to ensure that where we are carrying out a minus before division, we have to ensure it is bracketed. It is in brackets. So let's come down to the region on the formula bar, then bracket the first place, come right here also, put a bracket, then okay. So now we have the values. So now again we have the values for liquidity. When we talk about liquidity, these are the values. Now, what is this telling us? What is this telling us? In terms of liquid, we said liquidity ratio is dealing with what? Short-term obligation. Liquidity is talking about short-term obligation. Can the country pay off its short-term debt? Can the company pay off its short-term loans? Looking at it, we have a liquidity ratio of, in 2022 we have 0.76. Also in 2023 we have 1.05. Coming down to quick ratio, we have 0.56, which is above 50. Let's take note of that. Then 2023 we have 0.83. What can we say? Again, let me throw the question to the house as we end the class. What can we say based on these two metrics? What can we say as we come to an end? That will be my last question for today before I hear questions from everyone. What can we say based on these two metrics? Do we have anybody who wants to help us out? Ajiboye Damilola, are you there? Can you unmute your mic and talk? Okay, Mr. Olanle Samuel, I guess he wants to help us out. So based on this, as a treasury
Well,
analyst, what will you
well,
tell us
based
today?
on this
What will you
analysis,
have
right,
us do?
I would not advise to give out a loan to this company because
Okay.
the standard normally for this should be 2111, right? But apparently, there's a progression. For the
Hmm.
current ratio, there's a progression. At least in the previous year was terrible. In the current year, that's 2023, good progress. But you see, for the quick ratio, it doesn't make the cut at all. It does not make the cut at all. So I would not advise to give such a firm or a loan or lend money to such a firm because it will be hard for them to pay off their short-term obligations. They won't be able to meet up with their short-term obligations based on this analysis.
Hmm. Thank you. Now we can see things are getting interesting. When we look at the profit side, it was boom. Let's give them the loan. They are good. They are going to repay the loan. But um, looking at the liquidity ratio in terms of paying the short-term obligation, it is telling us we have to be very careful in what making that decision. You have to be very careful in making the decision because looking at the benchmark, then also looking at what we are seeing, there's a benchmark. You can easily go to Google. Let's check. Google is everyone's friend. Quick ratio benchmark. You will see it's going to tell us, as Mr. Emmanuel has Mr. Olale has said, let's just search for quick and quick ratio and current ratio benchmark. You see the figures. So you can see a quick ratio benchmark is generally considered to be what, around 1 to 1, right? While current ratio benchmark is usually slightly higher, often between 1.5 and what, and 2. What do we have for current ratio? Let's go and check the value. What do we have for current ratio? We have 1, then we have 0.6. Looking at quick also, based on the explanation we've got here, it has to be 1. But in 2023, you can see that it's going fine because it's above 1 a little bit. So we can see now this is telling us that okay, we just have to be careful. If we are giving them a short term loan, they might not be able to cover this in the short term, but for us to make certain decisions related to the long term, giving them loan in the long term, we have to what, look at the solvency ratio, which deals with debt to equity, which looks to debt to capital ratio. You understand? These are things we need to observe in the long term. These are things we need to observe in the long term. So I believe everyone enjoyed today's section. So let me throw the question to the house. Do we have, okay, Mr. Emmanuel, you have a question? So now again, I'm giving room for question, or if you have any question, you can just unmute your mic and talk, or use the chat box. Okay, so Mr. Emmanuel, you can unmute your mic and talk. I guess your hand is raised. Mr. Emmanuel, you can unmute your mic and talk. Or if we have anyone who has any question, we have less than 10 minutes.
But,
You can unmute your mic and talk. Yes, I can. Do we have anyone who have a question? So I guess presently we don't have anyone who has any question. So in the absence of question, so it's nice meeting everybody today, and I believe we all enjoyed the section, though it's an impromptu class which I need to prepare for as fast as possible owing to Mr. Emmanuel's meeting. He's meeting at his firm. So in my next class, which will be data analysis, take note, be watchful. We are going to be dealing with building a dashboard, a simple dashboard, because majorly data talks about you talking, it's all about data story or storytelling. What can you see in the data? What meaning can you bring out of the data? And I believe everyone is expected or expectant of, okay, how is the data class gonna be? Don't worry, I'm going to share the dashboard we are going to build together with Mr. Ojo Olamide, and also the assessment we are going to work on with Mr. Ojo Olamide. So today, for the section we have today, we have 2 sections left. At your own leisure time, I'm going to send the Excel file I've used for today's class. At your own leisure time, try and work with efficiency ratio and solvency ratio. Then send it to Mr. Ojo Olamide's email, which is going to provide, so you can easily access it. Then on Wednesday, you will get the class for efficiency ratio and solvency ratio. Thanks, and thanks for having me. Mr. Ojo Olamide, you have the class. You have the floor, sir.
Good
Thanks for
afternoon.
having me.
Thank, thank you, sir, for the wonderful introduction. We appreciate it. I personally have learned a lot. I'm very sure the rest you have learned. So for the email for the assignment, I will send the email to the message box so you can check it out. The assignment is one of the criteria for you to get your certificate. So it is, in fact, it is one of the major parts. It's very important, and we will be looking forward for your response on that. So without wasting much of our time, let's call it a day. I want to see everybody again next week, same time.